The home construction ETF, ITB, is up again today after hitting an all-time high yesterday. The CEO of Toll Brothers taking a bow on behalf of all the builders for having navigated a difficult housing environment on CNBC earlier today.
You know, this industry really should be looked at hard for a re-rating because these companies are structurally run differently. And for us to have the business we're having in the face of these rates, I'm just super proud of not just Toll Brothers, but I'm super proud of how this group is now being run, and we just deserve more respect.
My next guest agrees. In fact, he was early to call that this would happen. He just raised his price target on several big builder stocks and is especially bullish on two of them because of their direct exposure to single-family starts. Let's bring in Stephen Kim. Stephen Kim, he's homebuilders analyst at Evercore ISI. Stephen, it's great to see you again. Welcome back.
Thanks very much for having me.
So, by the way, just going to throw this out there. Is that a deserved bow, or are we going to look back on this as a sign of the times and go, well, the building trade was about to implode and, you know, we all should have seen it coming and that kind of thing?
You know, I think that this idea that the builders are going to implode is something that actually has provided the wall of worry for them to climb over the last really several years. Ever since the pandemic hit, people were wrongly thinking that the housing market was going to suffer. And then when it actually subsequently roared, people said, well, it's got to be the rates. And when the rates surged, to a level that we've really probably nobody expected, 2 years ago, people were convinced the housing stocks and the housing market in general was going to collapse. And that really hasn't happened at all. And so now we're in a very interesting phase where people are beginning to say, why not? Why have things happen the way they have? Why have the builders proven to be so resilient? People want to know. And in the investment community is very honest. They don't care about yesterday. They care about being right tomorrow. Mm-hmm. And that, I think, is setting the stage for the revaluation that Doug was referring to just now.
And a few of the investors who dipped into this space last year when the multiples were at 4 and 5 and just very low levels are now thinking, maybe I can take some profits here. Why do you think that could be too early or a mistake?
Well, there's a couple of numbers that I'd throw at you. First of all, that the small cap home builders right now are trading at 1.15 of book value. Book value is probably going to grow at least 15% this upcoming year. So effectively, they're trading at almost 1 times book value, in a year from now. That's an incredibly low valuation. It almost implies that the people think that these companies might not even be around, long term. So really, really inexpensive valuations just on a book basis. On an earnings basis, they're in the high single digits. It's very hard to find companies that are solid companies trading at high single-digit PEs. We think that the stocks are going to ultimately trade at least to the low double digits on a PE basis, and we think a further revaluation, even higher, could very well be in the offing over the next few years.